Welcome to Investors Insights. Our topic today is 10-10-2020. We chose those numbers and dates due to the fact we think we've got some valuable information you need to know about as we enter on into the summer of 2024. I'm joined by my distinguished colleagues who always enjoy our morning debates and discussions. Bobby Norman, Trey Booth, Ty Miller. Gentlemen, good to see you again. I know we just came out of a meeting and really appreciate the research you have done to present to our clients today. So starting off, 10-10-2020, Bobby, why don't you start us off here and explain what the first number means, 10?
Yeah, there continues to be a lot of talk and concern about the market concentration. So as you can see in this first chart here, the 10 largest stocks in the S&P 500 now account for 37% of the market's total capitalization. So to the extent to which this far exceeds the prior peak we saw in 1999 with 26%, this understandably makes a lot of people nervous. But we think it's important to note that the 10 largest stocks today also account for 31% of the S&P's total net income, seen in this next chart here. And so obviously with an average trailing profit margin of 26% and the average annual earnings growth of 264%, yes, 264%. So in short, the top 10 are a top 10 for a reason. So naturally, this does not mean that any valuation is justified, but with a 10-year treasury yields currently at 4.25%, as opposed to rates around 6.8% seen in the early part of 2000, the concentration risk doesn't give us the concern that it would have previously. And so obviously, in our opinion, the greatest risk to this, which would appear to be long-term rather than short-term, is the close relationship among these 10 that they're all mostly in the same sector. So we would like to see more broadening out of the market, but now we're not panicking.
Right. No, I thought that was great insight. Some clients have asked questions about that, and I thought you did a great job responding to those questions. And then Trey, the second 10, why did we mention it in our title?
Yeah, thanks, Greg. So the second 10 here is the 10-year treasury yield, which is, as we've spoken to often, is the most important interest rate in the world. And it often indicates where mortgage rates are going to go or where Fed policy or inflation. But today we're looking at it in relation to competition. Now, we look at the markets and the economy, and the most important concept in the stock market and the economy is supply and demand. Where's that balance? And our friends at Strategas pointed out in a recent publication this chart that shows when the 10-year treasury, at what yield does it become competition for stocks? When do people start selling their stocks to lock in? And their research shows that it's actually around 4.5% is when the stock market starts to sell off and people start to move money into bonds and to lock in those rates. Good news is we're currently at 4.21%. But if you look at this chart, you can see over the last year, in 3 instances, as interest rates started to get close to that 4.5 and even up into that 5, we saw the stock market sell off pretty severely. And then as interest rates fell back down, people sold out of their bonds and went back into stocks. So it's a really interesting give and take we're watching closely, where the 10-year treasury has massive impact on things you'd expect, like I mentioned, mortgage rates. But it really is currently having a tug of war with the stock market for capital. And at current rates, stock market's winning. But as the 10-year gets higher, the bonds start winning that pull against where the money's flowing, where your next dollar is invested. Is it in stocks or bonds? So something we're watching closely as rates are very volatile through these summer months.
Yeah, again, fantastic insight. So often people want to talk to us about the stock market, but that 10-year treasury is something everybody needs to focus on. So appreciate you putting that in terms that everyone can understand, but it's key in watching this market during the summer. And then Ty, you brought up 2020. So the year 2020, and of course we all remember that as the COVID year and tough times for this country. Businesses shut down, but there's also some other interesting data that I thought you brought out today. Talk about why we picked the year 2020.
Yeah, so since COVID in 2020, A lot of that time has been marred by, higher inflation, I would say, and that's something that, we've all felt. And so it'd be interesting to see, why is the stock market, why is it gone up since 2020? Well, one of the drivers, as you see in this chart here, is profit margins. And so profit margins are just essentially the revenue that these publicly traded companies are making minus their cost. And so yes, we as you see here, a big step up in profit margins from these companies. From the blue line is 2011 to 2019. Red line reflects 2021 to 2024. So our post 2020, post COVID period here. And as you see, most of these industries, these are the 11 sectors in the S&P, have gone up considerably. The kind of areas where we've really not seen a ton of growth are more the labor intensive areas, which makes sense. Labor has become a little more costly with consumer discretionary and staples here and healthcare and industrials, a little more labor intensive units. So how are these other sectors able to pass on their costs? Well, one, the technology advancements with AI and everything of that nature. And then two, I would say a lot of these publicly traded companies have done a good job of passing on the cost to the consumer. So while, us as the consumer have seen higher prices, throughout our lives here, our everyday day-to-day living kind of lives, these companies have really taken advantage and expanded their profit margins during this period.
Yeah, that's positive news. We've got a lot of good things going on as we enter summer here. People start their vacations. Sometimes on those vacations, they lose touch with some of the things going on in the market, and we like to keep everybody updated. Plus, that's our job to coordinate financial blueprints in relation to the markets and keep you informed. I received an email the other day from a client who had forwarded our vlog to some of the people they were going to join at the beach. And he said, we looked up and we were all discussing the vlog. And he said, really a lot of information that you guys provide, we appreciate you put in terms that we understand. And he said, it was great dialogue. And he said, I just had to share that with you. So we don't want you to always think about your portfolios and your financial blueprints when you're on vacation, but just know we're here at Five Plan Partners, always doing the research, coordinating between the financial blueprints and markets, and keeping you updated. We also on our social media continue to expand research and information, through Facebook, Twitter, LinkedIn, YouTube, our podcast. We've got some great things going on that we're going to present to you later this year. Very excited about that. And we just want you to know that every day we come through our office doors, we're striving to see to it that our clients' lives can be better, richer, fuller. And we thank you for believing in us. Take that vacation, enjoy your summer. We're going to keep you updated, and we'll talk soon. Thanks.